Chris, great to have you on the show. Let's talk about this warning from FedEx. Is this company specific? Is this a canary in the coal mine for the broader transports and global economy? How do you see it?
Well, the way we look at it is that FedEx is pretty good at picking up these types of trends early relative to some of the other names that we cover and some of the other industrials in the market. But we don't think the magnitude necessarily reflects what's going on in the market. So I think the trends can be very much macro and could be read across to other companies. But I think the magnitude of the miss is probably something that's a little bit unique to FedEx.
So given the fact that we saw UPS trade lower in sympathy on Friday, and we do tend to see these two stocks move together in general whenever there's news for at least one of them, do you expect similar read-through to UPS when we do get earnings?
Well, I think UPS is actually a bit more resilient. I think they have a little bit more visibility into the network and has done a better job really sort of managing the cost side of the equation. So they've been able to manipulate the network when they've seen volume fluctuations better than what we've seen from FedEx. We actually think they're going to deliver numbers, in line with people's expectations. We did get an opportunity to talk to the company right after the FedEx pre-announcement, and they still were fairly comfortable with where, with what they've told us about guidance. Remember, they had just had a sell-side event the week before FedEx pre-announced and reiterated all of their back half guidance, and they were sticking with that message the other night. So our expectation is their ability to execute through these sort of more challenging periods is going to be highlighted in the next couple of quarters of earnings results.
Chris, FedEx, back to that for a moment, had an activist, has 3 new board members, has a new CEO. Are they taking the steps you think they need to address some of these execution issues and what many say is a bloated cost structure?
Well, we're hopeful, but we need to see more proof that it's actually happening. Obviously, this first foray under the new CEO has been a little bit challenging in terms of the pre-announcement and the withdrawal of the guidance. We think that there is some pressure building on management to begin to execute a little bit more effectively. They did outline back in June a number of cost actions that they could take to pull forward to sort of, help with that bloat in the cost structure that you referenced. But I think it's going to take a little bit of time here. I'm not sure how much time they have, but I do think it's going to take them some more time. So we would expect maybe more in the second half of their fiscal year, which is about sort of 6 to 9 months out from where we are right now, before we begin to see sort of the benefits of some of those actions that they're taking.
Shepard Smith here. Thanks for watching CNBC on YouTube.